Welcome back. Now, U.S. President Donald Trump is set to impose sweeping new reciprocal tariffs on global trading partners. These aimed at leveling the playing field with the trade partners, raising government revenue and boosting domestic manufacturing. But what does this mean for the U.S. economy and trade partners at large? Old Mutual Wealth's investment strategist Izak Odendaal joins us now for greater perspective. Thank you so much for your time. Izak, this is the day that Trump has made. But really, we have experienced a number of crises that have pushed the world into recession. Could Liberation Day be one of them?
First of all, it depends on what we get today.
Yes.
Normally, you wouldn't say that tariffs would cause a recession. But if you combine tariffs with, let's say, a Federal Reserve that is reluctant to cut interest rates because of the potential inflationary impact, and you have consumers suddenly taking fright because they think that their prices are going to go up a lot, then it could actually spiral into a recession. And I think particularly if the uncertainty continues. So if Trump implements big tariffs today, but then also holds out the option that maybe they'll be renegotiated, or maybe there'll be other tariffs, or that uncertainty basically just pushes businesses to a point where they say, we're not going to make any big decisions, we're not going to hire people, we're not going to expand, we're not going to take on new orders, and then essentially the economy grinds to a halt. So I think that is your risk scenario in this instance.
And that is quite a big one. And we know that these kinds of decisions really impact how businesses make their decisions. You talk about maybe we could have big tariffs here today, and then maybe there's uncertainty. Maybe he might say there might be flexibility. I mean, there's also been a narrative that these tariffs are a negotiating tactic. And really that they shouldn't be all this panic. But is it still looking like that at this point, that it is just a negotiating tactic?
No, that was the assumption when Trump won the election. Remember, markets were very positive in November of last year, because I think investors thought that Trump would deliver tax cuts and all kinds of good things for businesses, and that he would be flexible on the tariffs. And so far, it doesn't look like he's flexible on tariffs. It does look like he is keen to implement them, although again we will see what happens tonight. But just remember again that flexibility, that kind of negotiation tactic or bluffing creates uncertainty, because if you're a domestic business and you need to make the decision, am I going to expand, you want to know that the tariffs are going to be permanent, right? So let's say you want to compete with a Mexican firm or a Chinese firm, right? You want to know that those tariffs are permanent before you actually take the step of increasing your own production. You want to know that you're going to get that protection long term. So again, if it really is meant to be a negotiation tactic, you're not going to be able to stimulate domestic manufacturing. And if the aim is to just gather tax revenue from these tariffs, then again you're also not really going to be able to necessarily achieve the goal of stimulating domestic manufacturing, because essentially they're just diverting the demand for these products. So the problem is, I think there are different competing narratives around what Trump actually wants to do with these tariffs, and so all of us are kind of sitting around scratching our heads and guessing. Hopefully we will find out a bit later.
And one thing we know about the markets is that they do not like uncertainty. You spoke about the inflationary impact. How bad could that be?
So normally, again, you'd say that tariffs are not inflationary. They cause higher prices, but that's a once-off jump in the price level. When we think about inflation, we don't talk normally about what the price is. We're asking how much is the price increasing year after year. So normally you would say these tariffs would just be a once-off increase. The concern would be that businesses use these tariffs as an excuse to raise their prices, again and again and again, and that consumers start fearing inflation, and then you get kind of a self-fulfilling prophecy. And that's the kind of thing that central banks really, really hate. They hate, they always talk about inflation expectations, anchoring inflation expectations at a stable level. They want people to believe in the US that inflation will be 2%. And if they fear that they are losing that belief, then they feel like they need to act.
Well, one of the sectors that actually had a lot of pressure on it when the tariffs were announced was the automotive sector. How badly hit could the car market get?
So again, if you think about the US vehicle industry, it's no longer really an American industry. It's a North American industry, right? So you've got those supply chains running across the Mexican border, across the Canadian border. Ford, GM, those companies have, you know, integrated themselves across those three countries and indeed globally, right? So these are very, very integrated companies. Those supply chains are very complex. They stretch around the world. You know, Trump, I think, thinks of trade as being a finished good, right? It's a car or it's a computer. But
Yes.
in reality, most trade is actually what we call intermediate goods. It's components, right? There's little components that travel all around the world and ultimately gets assembled into some final good like a car or a refrigerator or so on.
Yeah.
And so it's very, very difficult to kind of unscramble that omelette to say that now we need to gather that entire supply chain, all those components, everything needs to be done in one place, in one country. So again, it creates a lot of difficulty for these businesses. It creates a lot of uncertainty because again, they're not going to take the step of investing in a domestic supply chain unless they are sure that these tariffs will remain in place. Because otherwise, they go through all that effort and all that cost, and then tomorrow they find out that they could have actually just stayed with their Mexican supplier or their Chinese supplier.
Yeah.
And then I think the other factor, of course, is that this entire industry is facing the threat from electric vehicles, and particularly Chinese electric vehicles. And so all of this comes at a time where the industry itself needs to confront some pretty big challenges in terms of the future of the automobile. And I think these tariffs are probably very unhelpful. And you can see it in the share price of companies like General Motors, Ford, and so on. They did not respond positively to last week's tariff announcements.
Indeed. And just lastly, as we wrap up the conversation, I mean, amid all this uncertainty, what then is the ideal path for investors to take?
Yeah, I mean, I think when faced with uncertainty as an investor, I think that your best bet is usually, number one, to make sure that you are diversified, right? Because we don't know what's coming down the line. We don't have crystal balls, so you want to spread your risk quite nicely. But I think also, you know, let's just be patient and not have any knee-jerk responses. I mean, there's the tariffs today. There's stuff happening in Parliament. All kinds of volatility on markets today. I think you know, the advice is always just take a breath, calm down. Don't make any hasty decisions, because typically investors do more damage to their portfolios when they make knee-jerk reactions than what you actually experience from the market volatility.
All right. Well, thank you so much for your time and really just stabilizing our minds there as we chart this path. Uncertain path in the market. Thank you so much for your time. That was Izak Odendaal, investment strategist at Old Mutual Wealth.